It's fun to do these. Hey, good morning, everybody! Happy Sunday! Wakey, wakey, eggs and bakey. Hey, good morning, everybody! Hey, we're live on YouTube. If you weren't awake before, you better be awake now. Anyway, good morning, everybody. This is our weekend frivolity, our weekend silliness over on therationalinvestor.com. And I got to tell you, man, this site is, it's actually looking even more professional than I am, I think. These guys, the content that's added every single day on these, on the daily videos. And, one of our level 1 TA happens to be in the call here this morning with us. And he's doing daily write-ups on these videos, and we're reviewing a whole bunch of different names and different, whether it be stocks or commodities. Or we had just a totally awesome presentation by one of our site members on Friday on the very popular hyperwave thesis that's going around the internet these days. And I can't remember, I think his name's Tyler Jenks. Appropriate shout outs to Mr. Jenks. Your thesis seems to be resonating really well with the community. So we had somebody, a longtime site member, our mayor of Vienna, the gentleman who drives the bus on a daily basis for these daily briefs. He actually did a really stand-up presentation on that concept this past week. So, the whole 1 + 1 = 3. Just so proud of this site. And I got to say, I was in the level 1 class this morning, just sort of, being sort of a semi-participant, semi-student myself, listening to our level 1 instructor, Grim. And I said it repeatedly. I mean, you guys are actually really, really lucky that you get to work with Grim. He's so patient. He's so disciplined, OCD for the win. He's absolutely compulsive about, following the process and doing this correctly. It's a real privilege to actually have him on the team. So thank you so much, Grim. And Alex, his right-hand man. Those guys are just kicking it in the level 1 program. And unfortunately for the level 1ers here, and one of our students happens to be in the call here this morning, and she even said, wow, a steep learning curve. It's a lot to have to wrap your head around in a few weeks, the sort of eating your vegetables part of the course. But, I did see, and just a little message for the level 1ers, you're going to have so much time to play with price charts. You're going to have so much time to play in the candy store for the rest of your career. Take the time now and really try and wrap your head around fundamentals. And, if you are a crypto enthusiast, what does fundamental value actually look like in the crypto space? And, I think it's a good exercise. Before while I was in class just listening, I just said, all right, for fun, let's just go and Google how do you define value in cryptocurrencies, and you get tons and tons of different resources and stuff to work with and research. So you can't say that there isn't lots of debate out there as to actually how we value these things. A lot of you current level 1ers were sent to us by guys like Da Vinci, and thank you very much, Dav, for making the referral to TRI, and I appreciate your shout outs for Brian's little old lady model, and I'm glad it resonates so well with your community. On balance, I would like, and actually it was kind of interesting because we were wondering how Dav's fundamental model has evolved over time, because it's really cool as people go through the school. Of course, crypto is sort of evolving on its own timetable, and we have to end up going in and actually changing the fundamental criteria as the market caps and stuff change. But this is a very simple fundamental model that Dav put together when he was a student. It's interesting how we used to talk all the time. We used to talk about market cap less than $500,000. That was absolutely perfectly juicy. And then 2017 came along and the whole damn space blew up. So I find it actually incredibly fascinating that how, as they're going through the process of hitting the reset button, washing out all the fluff, all the silliness, and how people justified values of just horrendous prices and market caps on these things. When we come back to like tried and true, tested over time, fundamental valuation models, my hunch is we're probably going to get back into this world. So, the point is for the level oneers, and, some of you are stock interested. And if you are, learn up on CanSlim. I mean, CanSlim works. William O'Neill's one of the richest guys in the world. And it works. VCIM was taught to me by an old floor broker and on the Vancouver Stock Exchange. It works. I mean, don't want to make money from trading. Might as well follow the insiders. Try and get in on good structure names. Both of those models are excellent for sort of new ideas. And, there are people in the market that are just like, well, Brian, I don't want to chase after new ideas. I don't want to take that risk. I want to just buy value in the market. And that's where we, rely on things like the WDB, which is just a deep value screen. Later on in our education program, we get into writing derivatives to actually be forced to buy stock. And so that's where the WDB really comes in handy. We want to, actually be forced to buy stock by writing put options on deep value names, right? We want to make sure that these things are actually worth the money that we're spending on the stock. And then just a simple tried and true tested fundamental screen that's very popular in the market called GARP, or growth at a reasonable price. We should actually see, with the recent meltdown in tech through, the stock market through the fall, you probably actually should start to see a lot of GARP stocks pop up. So that was the focus of this past week. I did notice later on in the class, people were like, okay, but what do W's look like? What M's look like? Keep in mind, guys, that's technical analysis. This week, I really wanted you focusing on fundamentals. What does a fundamentally good idea look like? What does value actually look like? At the start of this Broiler Chicken show, I think I even said last week, what I really like to do is just kind of dovetail a little bit of what the level oneers are doing in class right now, and just give you level oneers, because there was like 50 or 60 of you in class. I was actually quite pleased to see that. Just give you the opportunity if you're like, well, Brian, I didn't quite get that question answered by Grim in the group tutorial. Is there any way you can just take another minute and sort of explain what your logic is here, what your thinking is here with this particular concept? So, Colleen, this is a shout out specifically for people like you, and it's great to see that you popped right in here. Try and get your other students with you to pop in. And use this resource, right? All right, Crypto Odyssey, awesome, right? Use this resource, right? That's where we're here to help you guys. Okay, I did hear some PMs, so it sounds like people are sending me messages. Cool stuff. Where should we begin today? Well, I guess we could start off just quickly with is there anything in particular you guys are asking for? I see somebody's asked me to take a look at BAT versus Bitcoin. So maybe somebody, before we finish off today, just remind me that we should take a quick boo at that BAT when we get into chart analysis. And then also on the site, we have this daily brief request lounge. And I do see that there were a few questions here to be asked as well. So where did we leave it? Let's talk about Grin. Now first came down, then a pump, it's now going down. I have to get your opinion, and it's listed on KuCoin. Okay, can we look at Grin and Beam? I don't know what Beam is, but yeah, we could take a look at those. I think I talked about this last week, but January barometer sort of working its way through the month. Last time we looked at this, and I think actually I even put it out on the Twitter feed, and that's kind of what I'd like to do here today too, is sort of walk through that Twitter feed. So here was our last broadcast on the 27th of January. So we'll sort of slowly scroll through what we were looking at and talking about through the week. I think I put the January barometer study on here. There it is. So there's just a simple old rule, and it kind of makes sense. Think about it in bigger terms. A lot of money managers will come into the market at the beginning of the year, right? They get given new capital to put to work. And so, as they sort of implement that capital that comes in on an annual basis into the market, for us in the public, we ideally want to stay a small fish in a really big pond. So, really, half of our job as small market participants is just simply to listen to the big boys, listen to what the smart money's doing. And actually, later on in the broadcast, when we go through the Twitter feed, I listened to a really, really intelligent young man who, from what I understand, has a lot of market experience as market maker and working on the floor of the stock exchange and stuff, and has lots of fun trading crypto. And he's basically reiterated the same message. Our job as the small trader is not to call tops and bottoms. That's a waste of our time. Because frankly speaking, the big boys, they'll just run over you. Our job is to actually listen to the big boys and then just follow their lead. So, when the bottom comes in on Bitcoin, it will be as plain as day. We will see big buying bars and all that kind of stuff, and usually a pretty violent reaction off of whatever the panic low is to sort of mark the bottom. So we'll get to that in a bit. But the point here is January price action. Usually they say that, big fund managers and stuff like that put a lot of new money into the market in the month of January. So as the month sort of goes, that gives you a pretty good idea of what to look for the coming year. And on balance, the month finished pretty positive. So interestingly enough, we've talked about this on the site repeatedly, and I don't know whether I mentioned it on the Broiler Chicken shows before, but I'm a big fan of the yield curve as sort of being the sort of signaler of recession. Yield curve has not inverted yet. So as a result, I think it's actually a little bit foolish to call recessions. And if anything, ironically enough, I think, believe it or not, that the biggest risk in the market right now is really political risk, not economic risk. The problem there, of course, is that economic problems overseas can spill into political problems very quickly. And of course, world wars and stuff start to develop out of political problems that develop because of poor economics overseas. The people in the United States, historically there's this battle between isolationism and globalism. I believe that the political structure in place right now in the United States is very isolationist. They would prefer to, put America first and make America great again and all that kind of conversation. And so really the question ultimately is how much of the global economy is sacrificed so that America is on top and America is number one again, all that kind of talk. And interestingly enough, for the level 1 students, they're actually going through it right now. I would actually make the argument that all of the things that you are seeing politically that are happening in the United States of America right now are actually laying the groundwork for the United States and the U.S. currency to basically lead the world in this next growth cycle. Like it or lump it, Mr. Trump is trying to, I'm sure in his community, they consider it just balancing the international trade equation. Whether it's balancing it or skewing it in the Americans' favor, the point is that Mr. Trump is trying to set the Americans up so that, America is great again and America is number one. And the irony of it all is that I actually believe that we are heading into a 17.5-year US dollar bull cycle. which is extremely hard for new people to investing and trading to see. I completely understand that a lot of, especially the level oneers that just come into the program, you're just going, this guy's nuts. He doesn't know what the fuck he's talking about. And that's fine. I don't care. I'm not here to convince you. I'm here to show you what I've done over the past 30 years and how this stuff plays out. You can believe me now if you want. You can believe me later. That's fine. But the long and short of it here is the data over the past century seems to back up our thinking here. So, with that said, it looks to me like 2019 is going to be a pretty up year. And what's really interesting about these January barometer reports is it's quite ironic how they're actually pretty consistently year in, year out, in that we have a very normal sort of seasonal cycle for the stock market where we usually start off the year kind of humming and hawing. Are we going to bull? Are we going to bear? Last year, for example, the market just fell apart in early February. I think there's a lot of humming and hawing about, investigations into U.S. executive branch and relationships with perceived enemies overseas. And from what I understand, a lot of those sort of investigations are coming to a head. So we might see like political bombshells dropped here over the next few weeks. So it doesn't surprise me that the beginning of the year, according to the January barometer, is going to be a bit choppy. And then, the classic Wycovian concept is think of, major institutions, banks, Goldman Sachs, Merrill Lynch, all them, as sort of the wholesalers in this business. And ironically enough, into the end of the year, I think the wholesalers got given their buying window and they all loaded up. And now they go through the process of marking the market up into the spring and summer. And of course, usually consumer through Christmas is feeling pretty tight because they spend all their money on Christmas gifts. So they can't really buy stock. But, come tax season and stuff, tax refunds and stuff, they're feeling a lot more optimistic and wealthy, and they want to participate in this bull market. And so, the markup that the wholesalers do, they're basically selling the product to the retail market at a markup. And it's pretty consistent year in, year out. Then about, and we have an old adage, sell in May and walk away. Usually the professionals go through the process of buying the market in sort of November, December, January, marking the market up, shilling it out to the public in through, March, April, May. Consumer gets their tax refunds. They're like, oh yeah, I got to invest. And, I don't want to, see a bull market go by, blah, blah, blah. One thing that actually used to drive me crazy as a broker was that people didn't understand that cash in itself is a position. What usually ended up happening when with my retail client base is that people would dump cash into their account and they would want to go and spend something on something. Well, and if I said, well, I would prefer you just sit in cash and just let your money wait, and when the market corrects, then we can go shopping, they would say, oh no, well, if you're not going to spend the money, then cut me a check and I'll go and spend it on something else. It's quite remarkable how these silly humans work. So what, ironically enough, as that sort of tax refunds come in, it just gets funneled straight into the market. And sadly, it usually gets funneled in right at the top of the seasonal sort of pitch. According to this sort of study, I think we're probably going to have a bit of a, very typical sell in May and walk away. June usually is kind of a sanguine month in the market. And then usually the second week of July, we head into second quarter earnings season. And kind of like what you've seen in the stock market here just recently, as soon as we stop talking politics and we stop talking about interest rates, and these companies actually start coming and reporting the actual earnings that they're making, then you see stock prices just jump up. So usually that happens about the second week of July, and then we go into sort of the funny summer silly season, where really they're pitching stock ideas to the novices. The pros are in the Hamptons, enjoying their summer vacations, yada, yada, yada. And prices usually get artificially bid up into like September. September historically is the worst month in the stock market. In fact, actually, the level threeers, we just did trading seasonality. So a whole bunch of stuff that I'm talking about here today, the level threeers are like, we just talked about this yesterday. But you can see, and what was really interesting was this was right on the Leap's expiry day, the 18th of January. The whole market just came right off as soon as that event happened. And my hunch is this is sort of going to be reflective of that sort of fall period where prices are zooming all over the place and manufactured panic scenarios, whatever. And then usually, buy when it snows, usually after Halloween, second or third week of November, the market bases and we actually rally into the end of the year. So interesting how January barometers sort of painting a very typical business as usual year. We'll see how this goes. If the market does break in earnest, then maybe the counter trend rally coming into the end of the year might be a bit muted. But on balance, looks like January barometer is just very typical business as usual. All right, so I just wanted to sort of walk through January barometer in case anybody was like, I don't know what the hell that is. Okay. Okay, so these are all not really necessarily any concept specific. I don't know, how did I get on that? Oh, I guess because I had it up here. Silly. Okay. These are sort of individual coin ideas, and probably the second half of the broadcast here, I'll just sort of go through these. Interesting, some silver recommendation, or take a look at a silver stock. Altcoin Schultz index. Yeah, it was really cool. Julian's presentation on his index and how he uses them. I can always show you my altcoin indexes. I mean, the index itself isn't really that rocket science. It's a site user. His name is Benjamin, who put together a lot of these indexes. I know Joshua absolutely loves to talk about his Schultz index. And Julian does have his own interpretation of the tool. If we're lucky, we can get Julian back on the Daily Brief doing reports. That would be kind of cool. I'll second that motion here. I'll even add my little please. Okay, so nothing really startling request-wise. I don't know if YouTube has killed the chat feed on these things. I'm not quite sure how it works. I noticed that YouTube has made some changes here. So you're going to go, all right. Yeah, okay, well, the chat does work on YouTube. So I see there's like about 30 or 40 of you over there on YouTube. So if you have a question, feel free to type it in the text box there. Okay, so let's get back to the Twitter feed and just quickly run through this. Okay, so last episode, where are we here? It's January 27th or so. Yeah, right here. It is interesting coming out of last week. It sure looked to me like the market was starting to look very heavy again. And we've talked a lot about this very interesting trade location, 78.6. This happens to be on Stamp. And unfortunately, this trend channel, just nasty looking trend channel. And when you have sort of like these horizontal support and resistance, you can see that low was pretty key. That low is pretty key. You can see they dipped it below there, but then took it back. So if we started to get it close below this, you can kind of see how this makes like a triangle. And ironically enough, the target actually, I think they like to call this a measured move off of these triangles. The target actually should be down in here somewhere. And interestingly enough, with this channel, you can make an argument key support is along the midpoint of the channel. A guy on the site, China Tim, he is super jazzed about these midpoints of the channels. They seem to work really, really well. And then also, too, we had this minor sort of trend line support just drawn off of these lows. So we could have seen some interesting support come in off of this level as well. So, I had a couple weeks ago talked a little bit about these inside bars, and if they fail, they kind of, I thought they were gravestone dojis, but I seem to be mistaken about that. But you can see this action here, inside bearish failure. We broke the lows of this little inside bar range, and sure enough, what's the direction? And then we had it again, right? Nice little inside bar failure, counter trend rally, which sort of broke the inside bar failure signal. Little shooting star here right against the trend line resistance level. And this bar, and this bar make a fractal. And if we lose this low, then that's not good. And I had sort of put out tweets, this big M here, not good. Right? Nobody likes M's. M's are yucky. So in essence, any sort of dip below this M, and keep in mind this is a V bottom down here, any kind of dips below and confirming this M, it's sort of like, she can jump if she wants. And I sort of put those tweets out. She's like standing on like a 5-story building, looking over the edge and going, well, do I jump? And it was sort of like, oh, no, I don't. And then we came back, oh, no, I don't. But notice we just keep setting up off of this one level here. And sure enough, we lost it coming out of that. And we dipped down. And I think we actually traded down to these lows here. So, on balance and, of course, on the site and stuff constantly on a daily basis, we're like, the bottom is not in yet, people. Don't go, calling bottoms here on Bitcoin. There's no sign of W's anywhere in sight. Just go slowly. If you're a little old lady and you're nanny nibbling and you're buying your Bitcoin once every couple months or something and just dollar cost averaging, totally fine. But this is not the time to go and say, this is the bottom. I'm going to go fucking mortgage my house and load up. At least wait for a little bit more positive anecdotal evidence. So in the face of that, things were looking pretty grim. And at the same time, too, this Tron story had sort of played itself out. And this is, by far, this is one of the prettiest technical setups you'll see. In essence, very wide range. And of course, that was that bidding up of that Tron. Everybody got all excited about that. Sorry, taking a sip of coffee there. Then we had sort of the initial break off of those highs. And you can see that, here was this break. And in this particular case, you can see higher low, higher low, higher low, cute little W. You could draw a nice little trend line off of that peak, and that peak. First market structure signal on the other side of the trend line. This is probably actually a really pretty bot setup that actually projected us up into here. And that's what these levels are. You see that 25 level right there? Basically, that's the bot entry. You're going to risk against these lows, and you're going to look for a tag of this AB equals CD objective, and that's what happened right there. But in this particular case, we broke, and then we just rallied right back up to the top end of the range, and then we went and put in this really nasty M up here. Ugh. So when I saw that, can you go full screen, please? Oh, sorry, guys. How's that? Is that better? Silly Brian. Thank you. So, and if we are looking at markets from a ranging perspective, when we start getting up into sort of 61.8 to 78.6, I start to say, oh boy, if this is a trading range, this is likely where it's going to fail. And sure enough, we went up, tested those highs, then backed off, then went back up, tested those highs again, and then, so ironically enough, that actually was a short setup on this particular name. I didn't necessarily have like short setups coming in on Bitcoin itself, but what I noticed, of course, is if Bitcoin is heavy, then you can go and hunt short setups on, the altcoins. And then vice versa. If Bitcoin's looking uppy and it's caught a bid and things are looking positive, you can go hunt your long names on altcoins. So that's sort of what I was seeing as sort of, like a proxy in the market. If I wanted to play the story short, maybe I'm not going to hit Bitcoin, but are there other trade ideas that are developing? And interestingly enough, this trade is actually still working, which is so fascinating. Let's see if I can find you the updated chart here. I think I have it over here. Where are you, Tron? There it is. And look at this. This is incredible, eh? I mean, and this is a trader's life. You don't know what the fuck's gonna happen. Anybody who actually tells you that they know for certain this is gonna happen or that's gonna happen, they're full of horse shit. You just don't know. Right? I try to teach the level oneers and new people to trading that what we actually are as traders is statisticians. You're never going to be right 100% of the time. You might as well just get used to that now. And really, what we do as traders is we just run statistical models. And ideally, we want our statistical model to be right 66% of the time. If we can get to that 60, 70%, our statistical model, and this is the more important point, that if you go into the market and you risk $1, that if you're right, you actually make a multiple of the buck. Some floor traders are like 1.5 times risk reward ratio is fine. I've shown you in previous videos, like some setups we have are like $4 paid, $5 paid for $1 risk. The key here is that when you are right, you get paid substantially more than when you're wrong. Extremely difficult concept for new people to trading to really understand. And that sort of speaks to the sort of profession of trading. Most people that come into this space, they're just like, I'm heading to Vegas, roll them bones. And that's not how professionals act in the market. So anyway, the point of the matter here is you can see how that M basically played out. There's a big dump right off of this. And actually, I spoke highly of Grimm earlier, and this is a great analogy of sort of that 1 + 1 = 3, where I use very specific bot trading levels when I'm trading these AB = CDs to break the trade into sort of a $1 of risk, right? So this is my risk window. If I buy here, I'm going to risk down to here. And if I'm right, I get paid $3, right? That's the whole key to this, right? Make sure that if you're right, you get paid substantially more than when you're wrong. And one of my, he was then a student, Graham, said, well, I absolutely love trading these 50% rules. What happens if I apply the bot trading logic to these 50% rule trades, right? This is basically shorting against the top end of the range, and I'm going to look to take profits at the midpoint of the range. So that's what this is, 25, 50, 66, and 100. And I thought it was fascinating, and I know that a trade is setting up well. When I throw on the range, I'm expecting the market to move to this level here, and the bot levels correspond perfectly with the market structure. It's almost like this trade was pre-manufactured. I love those. It's just, what you're going to find as a trader as you go further and further and further down the road is, you're just going to find that good trades are good trades are good trades. And you'll see little things like this set up where in essence, now I have a 3-to-1 built in on this trade, just simply trading the bot levels and, risking against these highs and this beautiful M. And I'm going to follow the bot rules as we work our way down. So it's really interesting how the market dumped right into the 50% of the bot trade metric. And that basically says at this point, move your stop to scratch, and which basically means break even. And if it does come back to your entry level, you just walk away. Big fucking deal, right? Next bus in 10 minutes. And I found it fascinating that, when Bitcoin was sort of rallying up there, this guy really tried like the dickens to get back up top. But every time it got back into this area, somebody just kept knocking it back down. So I still think, and if we hit this 66 level, then we can start moving our stop to what's called trailing. And we can actually start locking in profits, and think market structure. But the point here is that never did hit that original entry. So technically the trade's still working. And frankly speaking, I don't know what the fuck's going to happen here. I don't. And I'm not in the business of predicting what's going to happen here. I just simply have my setup, take my level, live with the results. And in this particular case, worst case scenario, you just walk away at scratch, on next bus in 10 minutes. And the interesting thing, I won't take that. Well, what the hell? I guess I'll do it. But it's Sunday, and Shane and I kind of got drunk last night, so didn't get much sleep last night. We were in Burger King at like 3 o'clock in the morning eating fucking cheeseburgers. But you need to understand, guys, right? I haven't got that much hair on my head. I really want to try and keep as much of what I got left. And there's no toupee here. This is my hair. Right? So it's a real priority for me to try and keep the anxiety of my life as low as possible. So if I trade like this and I just get rid of that need to be right, I don't know what the fuck's going to happen here. I just don't know. Excuse me, YouTube. I apologize, but it's trader's life. I don't know what's going to happen here, but I'm committed to my plan. My plan says take the short on the M top, and I'm just going to simply follow the rules of my trading plan. And interestingly enough, your relative anxiety about participating in this game actually goes down because you're downloading the trade onto the trading plan. It's not a question of you making correct predictions in the market and being Mr. Guru. Lose that need, because I guarantee you the market will embarrass you at one point down the road. It's a dangerous, slippery slope to get into predicting markets because nobody can predict the market accurately all the time. And just try and change the equation from I'm predicting markets to I'm trading setups. And, if the setup works, great, awesome, make money, account balance goes up, everybody thinks you're a genius. If the setup doesn't work, well, at least I followed my plan. I did what I said I was going to do. Next bus in 10 minutes. Seriously, guys. And thank you, Alex, for that affirmation. But seriously, that's the key to surviving at this game over the long term, is try and download the anxiety of being in the trade and what's going to happen onto your trading plan and just let go. If you've built your trading plan, the great part about our education program is I think we do really, really good job in helping people really vet out their trading plans and give you lots of opportunity to try and figure out what works for you individually. But once you figure out what works for you and you come up with a setup that's 60, 70% accurate, download the stress onto the plan and just trade the plan. Okay, so kind of a side comment here. This trade's still working away. Nothing's really changed here. And ironically enough, I think I don't know whether, Colleen, you've learned this yet or not. But I often say this. What's actually the biggest risk that most traders actually have to get into when a trade's actually on? What's the biggest problem? What's the biggest thing that actually ends up fucking up trades? I don't know whether anybody even knows the answer to this. Ironically enough, it's you. After you've actually done all this work, your job is actually now to just simply let the market work. But what usually ends up happening is we go in there and we tinker and we go, oh no, this thing, there's a W. Okay, I gotta get out of here, right? And then like 6 hours later, the thing craps out and goes to new lows, and you're like, oh fuck me, why didn't I follow my plan? Why did I blah 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 blah. So ironically enough, the hardest part of this is just to let this damn thing work and don't fuck it up. Man, Brian swear like a sailor. I must have really been out drinking last night, Shade. Shade and I had some fun last night. I think so. So I don't know what's going to happen here, but it's just interesting to see that this short is actually technically still working. Okay, so I hope you guys enjoyed that little tangent there. Sorry, I'm just. Do you guys mind if I just have fun with you guys and just sort of talk to you? I hate how a lot of these broadcasts are just sort of like do this, do that, do this, do that. I just want to talk to you guys. Trying to explain sort of what my thinking is here. All right. It was interesting coming out of this event that, I like to follow the Chicago boys. And it was really interesting how heading into a Friday afternoon, they printed this last little gapping candle. And then literally first thing Sunday, the Chicago boys just ripped the market hard here. So that was basically my comment. And you notice whenever I in the feed, if I go Chai Boys or New York Boys, what I'm usually talking about is like you see it says CME here. This is the Bitcoin contract traded on the Chicago Mercantile Exchange. And I got to say, just sort of as a dovetail to this tweet, there was a really, really cool video. It was a short one. It wasn't very long, maybe like 10, 20 minutes or so, that this one gentleman put out, and I tweeted it out halfway through the week, right here. And I even said, fantastic, very real piece. This gentleman, he went to great lengths to break down the argument. I thought he did a very, very good job. Just a young guy. But in essence, how the CME and CBOE are influencing crypto, and because it's not an actual physically settled Bitcoin contract, it's just nothing more than accounting, right? And it's all settled in US dollars, that they can totally fuck with this market and have just all the fun that they want. And it doesn't really, Bitcoin itself has absolutely no interest in this, and it's not even really related, which is kind of sad. It's a really interesting commentary on, the classic Bitcoin enthusiasts. Their big argument was there's only 21 million coins out. Well, technically, if these guys just keep coming out and hitting the market, hitting the market, hitting the market, hitting the market, it doesn't matter how many coins Bitcoin has out. If they're big enough and they have a big enough wallet, and keep in mind these guys in Chicago and New York have pretty damn big wallets. They can totally dominate this market, and just simply through this US dollar settled proxy on Bitcoin, which is really sad. And if anything, it really speaks to sort of the real sort of cheekiness and a little bit of danger. And, even Grim mentioned this the other day, how, not the other day, in class today. Believe it or not, actually, a little bit of regulation isn't such a bad thing. And I actually think half of the reason why these guys can get away with this is because Bitcoin isn't regulated, and they're just messing around with this market. Now, here's a really interesting parallel that actually came out of our binge last night. I don't know what we call that. When you bring out the shine, it's bingey talk. But I'm going to be working on this over the next little while. But I had one of these light bulb moments yesterday with Shane. In the mid to late 1970s, and think of the fear and greed cycle. I don't know whether I actually have the fear and greed cycles images in the library. I should probably try and make sure that they're in there. I don't think I do. Let's see, would it be in here? No, I don't think I do. So give me a second here. Let me load this up. I gotta find it. PowerPoint. All right. So, we have to understand, like, generationally, there isn't a heck of a lot of new that happens in this world. Ironically enough, we humans, we actually end up doing the same things over and over and over. So here's an image of the sort of long-term relationship between hard assets and soft assets, gold and paper asset like the Dow. And hopefully, everybody can see this sine wave pattern back and forth. And the question ultimately this cycle was, gold ended up bottoming right on this trend line, which ironically enough actually makes perfect sense. But, how much of this dip here that we should have seen where gold gets really, really strong relative to paper assets, how much of that was eaten by Bitcoin? And we've talked about that in previous videos and stuff. But really, this is the image that you all really need to focus in on to really understand this concept. And that is that as we go through our life cycle, we have especially if you have like generational gluts, like the baby boomers, And like, now this recent glut's going to be called the Millennials. You have to understand. I mean, a lot of people don't like this because what it really implies is that we don't have a lot of control over the sort of our destiny, and our fate is already sealed. And a lot of people don't like thinking that. They like to think that things move specifically because of their choices that they make in life. When in reality, what we find, especially if we look at massive populations all moving in unison, right? Where you have tens of millions, maybe hundreds of millions of people all basically going through the same sort of growing pains of life. So the point that I'm trying to make is that I would argue that the millennials here are exactly the same as the baby boomers back in sort of 1980. It's shocking, the similarities. And this is the light bulb moment that I had last night. Was through the latter part of the 1970s, was there any new product, any new way for the baby boomers to participate in the market that their grandparents never really had? Does anybody know? Was there a new product that came onto the market in the late 1970s? Shane. that their grandparents never really had any access to? No. Mutual funds have been around forever. No. The futures industry, right? The futures industry really got its kickstart coming out of Nixon taking the Americans off the gold standard in the early 1970s, Bretton Woods and all that. And my question for you is, and then of course, through the maturation of the futures markets, how did those assets prices perform heading into their respective fear cycle apex? They did pretty well, eh? Can you guys see the similarities between this? And then if we look, and I've shown you guys this image repeatedly, but yesterday it was just like now I get it kind of moment for myself. And this image. Does it make sense that in you can think sort of mid 70s, heading into that fear cycle apex, all these things called financial futures all started coming on the scene big time. And, I mean, it doesn't matter whether it's soybeans or whether it's cattle or whether it's corn. This was a whole new way for the public to participate in the capital markets. And in essence, through their baby boomer respective fear cycle peak, and actually this is like the greatest generation moving to the baby boomers, the futures industry took off like a rocket. And, maybe take some time and pull up a bunch of futures charts and see where they got their start. And gee whiz, it was near the end of the 1970s. That's when a lot of these products came on. And the advent of the Chicago Board Options Exchange, same thing, options is sort of a new way for that generation to participate in the market. And can you connect the dots between that cycle's introduction to the futures markets and what happened with very popular futures asset proxies through that cycle, and then cryptocurrencies coming on the market basically in the latter part of this fear cycle, right on cue, and them all going absolutely nutso into that respective cycle peak. When I sat and I actually thought about this yesterday, it was like that was like a massive light bulb moment for me, because I've been grappling with this. How is this cycle similar to the last cycle? And it just clicked. So One Alaska, you're saying, I'm guessing this isn't a place he is monitoring. So you guessed wrong, my friend. I am monitoring. It's just I was right in the middle of a rant. You can't cut me off mid rant. But I don't know whether you guys get this or not yet, but for me, that was actually a really powerful aha moment yesterday. And the pieces are just starting to make a lot more sense now, where in essence, the baby boomers, coming into the workforce, very much like the millennials, really wanted sort of a new, sort of different way that mom and pops didn't invest, and they had these things called futures, which were all the rage in the late 70s, early 80s. And what's so tragic about this, and we were talking about this in class yesterday, is that, these moves got so exaggerated that a lot of the seasonal tendencies, which was the sort of sales pitch to get involved in futures industry in sort of mid 70s, a lot of them got totally thrown out of whack. And the futures industries guys, they got sued right, left, and center because they would do the seasonal sales pitch. Buy your unleaded gasoline in the middle of February, sell it the middle of May, you made money 9 out of the past 10 years, that kind of conversation. But through the period where they had to unwind that nutso insano psycho peak, a lot of the seasonal studies sort of went out the window. And people are like, hey, you promised that if I bought my altcoins in the spring, through the summer, we're going to get rich, right? You might find that, hey, maybe for a year or two, maybe that doesn't happen in this space, because we got to continue this unwinding process of this particular cycle. So, wow, that sure was a mouthful. And yes, it was a rant. I apologize. But it was a eureka moment for me last night. And frankly speaking, I feel better for it. And actually, things make a heck of a lot more sense to me now in the market. So anyway, Brian's rant for the day. A couple of interesting historical pieces. I love to put out historical pieces just to give you an idea of, how assets have built out and how they've done sort of respectively over the years. The interesting thing is, even though we still, thanks, Killing. Even though, well, Yo-Yo, I appreciate that. Yo-Yo says, great sense of humor. I would love to learn to live life like you. Yo-Yo, I learned, hey, you obviously don't know my story. I've been to hell and back. And the weird part about it is I've actually seen the other side. It's really freaky. But you don't want to live my life, trust me. You don't. But we used to have an old expression when we were brokers, and especially as brokers, right? Because you might have to sit on a book of client stocks, and all the clients are bitching and moaning because it's a bear market and there's nothing that they can do, and they're little old ladies and they're just sitting there on their assets, not doing anything. But we used to have an old expression, Yo-Yo. We used to say, if you don't laugh, you'll cry. So you might as well laugh. So I may seem lighthearted, I may seem fun, but inside I'm crying every day. Just kidding. Thank you, Khalid. PMA for the win, right? Yeah, you have to try. After my wife passed away, right, I didn't really have any reason to be alive other than I had to somehow hang in there for my son. And really, Julian coming into my life and just reassuring me that actually I had positive things to contribute to this world, and we could make a difference, right? I just live every day like that, right? And as long as I'm delivering value to you guys, and you guys are asking, you actually see value in what I'm saying here, and you're learning, and maybe you're becoming a little bit better over time. You're better at managing yourself. You're better at managing your emotions. You're better at, identifying setups that actually work, and then going out there and making money from trading. Then I'll just keep doing this, right? As soon as and the great part about that kind of attitude is I don't have to worry too much about my ego getting too big, because I already have a really shitty ego. In fact, Shane is always like, oh, here comes Brian, his self-deprecation and all that shit again. Oh, I'm sorry. I got to hit this button. Oh, okay. I listened to you guys. There you go. I got rid of the heads. I'm sorry. And keep in mind, Monday to Friday, Alex is doing this. And so The videos are way better. I'm sorry. I didn't even realize I had the heads on there. Sorry, everybody over there on YouTube. And thank you, Joshua. So I appreciate that you still see value. So that's good. Okay. So what I find really interesting about this image is, like internet's like down here, right? And we we actually internet build out and all that kind of stuff. We still haven't hit the sort of size of what the transport industry. I mean, keep in mind that transport industry, industrial revolution was massive, huge impact. So I thought this was a really cool sort of side picture. Now, as we were sort of coming through the week, and this is interesting because I'm going to talk a little bit about this interview that I tweeted out. I think that this gentleman is extremely smart. Where the hell is it? This guy here. Isn't that weird how the video's not showing? I think Google changed something about the video embedded and all that kind of stuff. So they don't come up the videos. And I noticed that I had to manually tweet out. So, oh, that's good. Excellent, Crispy. I appreciate that. That's good. But this gentleman, What's going on, guys? This guy's kind of fun. Another episode. And I like this guy because he's just very candid, right? He's like, I like fundamental stories. I fuck up, I do good trades. I do bad trades. I love that about him. And good traders, the irony of good traders? The irony of good traders is they'll just give you the straight goods. Yeah, I got stopped out on that trade. So fucking what? Next bus in 10 minutes, whatever. So I really like this guy. But this guy, holy fuck, this guy is a monster fucking trader. And I somebody posted this on the TRI site and said, hey, Brian, you might want to check out his work. And frankly, I spent probably about 2 or 3 hours just picking this video apart, just going through, things that he was just speaking about that I thought were really good points. And I just sort of put the time mark on this video. Very, very smart gentleman. And I think everybody should listen to this video. I thought it was really, really good. And it was really interesting too, because right at the end of the video, the irony of it all is that he gives you, with talking to the other guy and his fuck ups in the market, he gave you basically the gold-plated, number one, the secret to making money at this game. Follow the smart money, right? And then number two, why it's so important to work with a trading plan. And, I got to say, I love it because in essence, that's basically a sales pitch for if you don't work with a trading plan, you don't know how to build a trading plan and you need help, well, come talk to Brian, right? And we'll be more than happy to get you set up and headed in the right direction. So excellent work. And, you can clearly tell this guy's a pro, no doubt about it. And he talks pro talk. He talks risk management. He talks setups. He talks TA. He talks. What I really loved about this interview was he talked a little bit about, like the level oneers right now are trying to understand this whole idea of 3 unrelated reasons for considering taking a trade. And he talks quite a bit about this NVT. And I kind of like it as a completely uncorrelated, unassociated reason to consider taking a trade. The sort of network value indicator. Really, really good interview. Excellent, excellent interview. So, by all means, I think it's a good idea. Everybody watch and listen to what he had to say. But getting back to what I was sort of talking about before, right, coming out of the gate here. So we actually came into a very interesting trade location for Harmonic traders. And that was this Gartley level. This happens to be Stamp, all the other exchanges. They're all very, slightly different, very slightly. So they're all slightly different. I put out a tweet halfway through the week, if this is a harmonic pattern, we've come into a very, very important level here. And interestingly enough, as we sort of work through the week, and we can probably find that chart now for you. I guess that's over here. So many charts. One of these charts is not like the other. Well, actually, this is Coinbase, and I love doing GAN, so we're having lots of fun GAN. On top of the fact that there's that 78.6 tag right there, that Gartley level. It's interesting how this was actually off of an 8-to-1 GAN angle level, and GAN people love 8-to-1s as trade location. So interesting too. And often we talk about this on the site and in trading. If you can find 3 unrelated reasons to consider taking a trade, odds are you can find 4, 5, 6, and 7, maybe 8, even 8, 9, 10, and 11. So we actually, on top of the fact that that was that potential Gartley level, harmonic people, we started getting a whole bunch of reasons. Hey, this is looking really interesting here. And I think I have the Gartley level. Do I have that over here? Nope, not on this one. Where do I have that Gartley chart? Too many charts. My head's gonna explode. I think I actually had it on here too. This was, you guys have probably seen me tweet this chart out. But there is that, this happens to be now off the MEX chart. There is that Gartley level in the teal color right there, doink. And what's interesting is at this point, $64,000 question, is this Gartley, is it not? You can see that we actually went into like big fight mode. And what was really interesting about this too, I don't know whether I can show you this or not only was this a Gartley level, but we actually had 3 different harmonics that all really like this level. So I don't know whether you can see this dark blue. This is an AB equals CD. I don't know whether that makes any difference. No, not really. So the AB equals CD, you can see that reference there. That was that level there. The Gartley, the teal, that's that Gartley level there. And then, interestingly enough, we also had this cheeky little, what's called a shark pattern. Boom, 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 which painted that level there. So it really shouldn't have surprised us that this was going to be one hell of a fight. So there was that Gartley level. And, as we've told you before, you can trade harmonic levels, but you got to understand, if you are a harmonic trader, they look at the world a little bit differently than the rest of us. And, they would have a strict rule that you have to take partial profits at 38.2s. See if I can show you where that is. So if we just go off of this range, although I think they actually will be using this high up here. So the harmonic guys, they're going to be watching for 36.88 here on this MEX contract like a hawk. And they took this 78.6 that you guys probably heard me talk about reload zones before. Right, that's that there. So they're going to hit this. They're going to hit this 78.6 doink. They got their fill, and you can see. I don't know whether I'm right, but their initial objective, I think, is up in this 36.83 area. And the interesting thing is, what I like to teach on the course and on the site is trying to have 3 unrelated reasons. Hitting like harmonic levels unto itself, that's just one reason. There are people that do trade harmonics, and I'm not going to fault them. If you're interested, Google Scott Carney, I think his name is. I think even in the library we have links to his videos and stuff. I mean, very smart guy. It's pretty high octane, and you got to be a pretty advanced trader to actually have your open order working here. Because keep in mind, what do you think the public is thinking as we're sort of cascading lower down into this level? Right? If you go out on Twitter and stuff like this, and we're breaking down here, I absolutely, and I saw it. People are like, "Oh, sky's falling, Bitcoin's going to zero," right? Extremely high anxiety trade. I'm not going to sugarcoat. Harmonic trading is very high anxiety, but nonetheless, quite often they get handed really, really sick trade levels. And sure enough, if they got their fill in there, they're probably feeling pretty darn good about themselves. Oh, hello. Oh, Rocket Chat's jumping all over the place. I don't know whether your guys' Rocket Chat just blew up, but mine did. I don't know what Sjord's doing. He's playing in the background, I guess. Let's see if I can sign in here. Did your guys' all Rocket Chat just go a little crazy there? What happened? No. So I guess it just must be me. Hey, there it is. Welcome to Rocket Chat. Yay, it's back. All right. Well, that was fun. Okay, so once upon a time, came into this Gartley level, and as I sort of tweeted out, oh my god, well, $64,000 question. And this is the weird thing about trading is where did that Twitter feed go? Did I lose it? Is you just don't know. Nobody does. Remember I told you about that Tron trade, right? Nobody knows. Nobody can tell you the future. And really all we're doing is we're just playing statistics here. So there's a pretty high statistical probability that we do not break this low and the market revisits back up into here, right? And the Harmonic guys get their trade off. To be able to act on these events, of course, you have to pre-plan everything. And it's just simply a question of, can you follow your plan? And if your plan is, look, I buy 78.6s religiously, and if the market does come down into that level and you didn't buy, well, that's where the problem is you didn't follow your plan. It's a behavioral issue. But that's, we don't need to go back down that rabbit hole. Okay, so $64,000 question. Is the bots alive? I think I posted this as a follow-up to the Tron trade. Yeah. So as I sort of talked to you before, at this point, worst case scenario is you just walk away at scratch. And as I sort of showed you, this trade's still working. And really, your job as a trader is just don't fuck things up, which is so funny as trading, right? Half of our job is to sit on your hands and put the mouse down. Interesting. People are talking about how price action is kind of boring. And interestingly enough, this gentleman, which I thought was kind of interesting, is he actually painted a descending wedge into this 78.6 level, which ironically enough, descending or falling wedges are actually bullish. So ironically enough, this is actually technically a bull setup. Of course, there's many different ways to interpret price action. He happens to be drawing it this way. So, yeah, Colleen, indeed. I mean, if I'm throwing too much information at you, just slow down. You don't have to absorb it all right away. Keep in mind, I've been at this for like 20, 30 years. I think it's important that we, like I got into a lot of hot water with the sort of Twitter people and stuff about me going on about how I really didn't like the way Mr. Trump was sort of taking a sledgehammer to international trade relations. And this whole idea of trade wars. We have to understand, guys, that trade wars never end well. I've been at this, like I said, 20, 30 years, and I'm a student of history. Trade wars, you could argue, was one of the main reasons why the Great Depression happened. As soon as everybody thought that their local markets were being jeopardized by foreigners dumping products, and they started raising tariffs, well, that just made the situation that much worse. And so in a weird sort of way, like I'm going to keep on this story. And I'm going to show everybody how ultimately we will see that the economic data down the road, if the market breaks and collapses, it probably is going to be directly tied to these trade problems and politics rather than the actual economy itself. That's my hunch. And so I will just keep on this. I know people are going to be like, oh, enough, Brian. Okay, fine. Trade wars don't end well. But that's sort of my job here is, when I first said this, people are like, fuck you, make America great again. Fuck you. Right. But the bottom line here is this is not the way to actually make a better economic situation. This is a way to make this economic situation worse. So anyway. MAGA? Welcome to MAGA country, Brian. I don't know what that is. But anyway, welcome, John. Nice to see you. Of course, Dav is spitting out his signaling system. It's basically based off of our principle of what we taught him on the program of just buying against lows, right? Hopefully, everybody can see reload zones, all that kind of fun stuff, little W's, and selling halves on doubles. The great part about Dav, I got to say, is he's extremely consistent in his behavior. It took him a while to sort of buy into sort of the way that we look at the market. And it took him a while to sort of put away ego. And the great part about it is you listen to interviews with him now, whether it be in Davos or his YouTube feed or whatever. I don't hear any ego from Dav at all, which is beautiful. And it tells me that he's a pro. And, when I interact with our OGers on the site, the one great thing about Grim, fantastic trader, probably trades circles around, guys in the classic, trading world, and especially like CNBC idiots. No ego at all, right? Because they don't need to. Ironically enough, you know what I found? I found that those people that have really big egos, actually subconsciously, they're very questioning of themselves. People that actually know their shit and that they don't need to have validation from their peers to go and make money and make a living and do very well in this world, the ego just vanishes. It's great. Like we have one guy who does the weekly broadcast with us, Thomas. And man, I love working with that guy. No ego at all. He's just so down to earth. I love it. And I got to tell you, same sort of thing. And, when I see a good trade, I'm going to tout it. Good trade, sick trade. Way to go, dude. That's what I want to see. More of this, more of what works, and less of what doesn't. And that I kind of like that about Davies. Very consistent now. I think this is a really good sort of testament to, if you can sort of step back and look at the big picture, can you see how they basically have washed this market out? I mean, this market has washed out. And, the interesting thing is, and I remember I did this for the level tours when they started the program, respectively, and we introduced them to volume profile a while ago. And we looked at name after name after name, and we're all like, well, the market has to come back to the POC. And sure enough, here is just a beautiful illustration of the market working itself right back to the POC. And, for those people that are interested in volume profile, and what's really cool, this guy, he even talks to you about the importance of the POC and the way professionals use the volume profile to try and tell them where the market needs to go. So the point here is that, what I find fascinating about this space is here, everybody's telling you about how risky shalt coins are. And I would actually make the argument that this is where everybody had to be pounding the table about how risky this space is. And ironically enough, at this point, I would actually say that most of the risk is taken out of the market. And if you actually go and participate in a name like this, you're actually buying where the smart money is actually long. So that's the irony of this space. And they always say when stuff goes on sale, nobody wants to buy. It's funny how this business works. So here's a great example, and that's sort of the message that I was trying to get out with this tweet is I think they've completely washed these markets out. They're done. It's over. Right. And now, if anything, what we have to think about is not what happened yesterday. Oh, I got wrecked, right? Or I lost all my money because I bought the top. Well, you got to learn not to buy the top. But what is tomorrow going to look like? What is 6 months from now going to look like? What's a year from now going to look like? And the irony of it all is, what I simply said here is maybe they just take the market sideways for a year or two. That could totally happen. But the acute risk, like versus buying up here, I think it's taken out of the market, and we can go coin after coin after coin after coin. I mean, it's remarkable how the market looks like this. The risk has been taken out of these assets. And as I said, this is the only business when stuff goes on sale, nobody wants to buy. And the irony of it all is actually now is the time to start buying. So go figure. Now, this is an interesting sort of spin on how this bull market unwinds. there's two significant risks here, right? There is what they call systemic risk and unsystemic risk. I would argue things like Cryptopia, and we just saw what happened on Quadriga, and I think I tweeted that out as well. Up here, right? This is all about systemic risk, the system. Exchanges blowing up. In this particular case, and I find this fascinating because this is actually going to be very, very telling for this actually might set a really extremely a really important precedent going forward. Can the courts legally make a case for breaking into this guy's laptop and bypassing all the passwords and security measures that he put in place so people couldn't access his private keys? Can the courts make a case that they have a legal obligation to do so in the name of their $190 million worth of members who are frozen out now? If I understand the story correctly, the guy who actually, I guess, founded Quadriga went and died. And all of the private keys and all of the access to all the wallets are on his computer. And his wife even said, we can't get into his computer. So this is going to set a really interesting precedent going forward. Because, of course, if Big Brother can make the case that, hey, we can legally go in and bust all his protection, bust all his passwords. And frankly speaking, I think Big Brother can on anybody's computer if they want to. But this will actually set a precedent. And then in the future, instead of them going through the whole debate, do we do this? Can we do this? Is it legal? They'll just say, well, according to the Quadriga precedent, this is the statute that we can use to justify this action. Which, ironically enough, might make this whole concept of private keys and all that kind of stuff completely meaningless. So this is a really dangerous precedent that's being set here. Hey, we all need to watch this story and how it evolves. And how does crypto respond to... Jonas says, I read he was alive in India. Probably fake news. And, actually, it was kind of funny. I put out a tweet, replied to a guy with a tweet about, you can't write better fiction than reality. And we were talking about something else. I can't remember what it was. I used the story of Briex, right? Jonas, do you remember Briex? You're probably old enough to remember Briex, where the guy who committed the fraud, mysteriously one day he just accidentally fell out of a helicopter. Oh, and by the way, the jungle is so thick where he fell out, his body's never been recovered. That's awfully convenient. Oh. So maybe he's running around India right now. Who knows? You can't write better fiction than reality. But the point of the matter here is those people that are living in the reality now, these $190 million of customers, and I think we even have a couple customers here at TRI that are part of that $190 million. They want their money back. So they're actually motivated to try and set this precedent that, yeah, the government can go in and break into your computer. No problem. So, like I said, really interesting. And also, too, again, talking about systemic risk, this is a really interesting conversation about exchange risk. And so, like the other tweet that I put out here about Cryptopia, this is yet another example of systemic risk. And what I found last cycle was exactly the same thing. You can either have unsystemic risk, your individual coin, and I bought lots of nutso coins that literally went off the board right away. Everybody knows Cabbage coin. I never did buy Cabbage, but I remember I bought this one coin called Balls coin. And Alex Sturck and all the guys, they were just laughing at me so much when I bought it. I got off a double on it, so I didn't care. I got my money back. And then like literally after the exit pump, the coin just literally disappeared. So go figure. But that's an example of unsystemic risk. And there's two risks that we have to worry about here as the crypto story unwinds. Is, unsystemic, can your coin actually last? Does it have any value whatsoever? Was it a total pump and dump? Whatever. And then systemic risk, and all I got to say is one word: crapsy. Anybody remember crapsy? Or mint pal? There's another one. And it's interesting how people don't, like, Dav doesn't even say Mount Gox, he says MT Gox. So, MT Gox, Mount Gox, whatever the hell you want to call it. Another example. That's an example of systemic risk. So there's two very unique risks. And the interesting thing is Cryptopia and Quadriga, ironically enough, this isn't new, guys. It isn't. And it is one of the ways that the market unwinds and breaks the public's hearts. Is it your actual coin that goes belly up, or is it like an exchange that you have your account on that goes belly up? So really interesting. Now, one thing I do like about this story that's developing is, I think that, first and foremost, I noticed that hackers can be extremely smart, but they can also be really stupid too, especially if they get greedy. And I wonder, because I think the story was that the hackers went back to Cryptopia and tried to raid the cookie jar again. Now, on the Daily Brief, we were debating, is this did the hacker sell the access to Cryptopia to a third party to try and cover up his trail, and then that third party went in and tried to raid the cookie jar again, and then they'll get caught and they'll get screwed over, or not properly addressed by the authorities, right? But so this is a really interesting soap opera that's going to develop. Now, my question ultimately is going to be, I've got a whole bunch of I use Cryptopia as one of my garbage cans. So, if my primary exchange that I was trading on delists the name, I would move the coins off to some other exchange. Where are those coins? I know the hackers came in and stole like Ethereum and, Bitcoin and stuff, but all my garbage coins, they all should technically still be just sitting there. So I'm not quite sure how that plays out. And I would imagine there's probably a lot of other people that have coins that they're like, I don't really care about your problem. I just want my coins back. And I know that the hackers didn't steal my balls coins because nobody wants them. So I'm not quite sure how that plays out. So keep an eye on this. And I certainly don't think the story's over. Okay, so as the week sort of developed, and it was interesting, we had a Fed announcement midweek. What I find really fascinating is how, first and foremost, this guy, you literally are watching him go white as time goes by here. And there's always an old quit it.
What did we learn?
I don't even know what the hell this video might even be bullshit. I thought it was him, but I don't know what the fuck this is. But it's really interesting to watch as basically this guy is going white, and it's kind of sad. But there's an old adage in the market that says that usually every new Fed governor, the market tests them. And go Google an image of Janet Yellen and go see what her hair is. And the irony of it all is I think the market's just fucking with this guy right now. And, he gets sucked into political conversations. He should have absolutely no interest in what the politicians have anything to say right now. And yet he's getting sucked down that rabbit hole. Oh, maybe I should acquiesce. Mr. Trump's going to fire me, blah, blah, blah. I find it really interesting that basically they came out and said that we don't need to raise rates. But if you actually look at the data, and this is why I really like these kind of studies, I don't like listening to talking heads or government officials telling me what's going on in the market, because half of the time they're politically motivated statements and they're often actually wrong. So I like to use market-based proxies, actually, where people are spending money out of their pocket to try and understand what's going on. And this is what's called the TED spread, which is ironic because the reason why it used to be called TED spread, it was T-bills divided by euro dollars. We don't use T-bills anymore. Now we use the Fed funds. So I guess we have to call this the Fed spread, which is kind of interesting. I never even thought of that. Maybe that's actually not a bad, I'll move towards that, the Fed spread. But in essence, I had made the argument that the Fed really had no choice but to raise interest rates as the corporate interest rate market was collapsing and interest rates were going higher. And you'll notice that in the corporate interest rate market, you can actually see W's coming in here. And so I actually think that the Fed was given the green light, and this is the spread. You can see it unwinding here. The Fed was given the green light not to raise rates. This was a market-based proxy, not politics, not, government-generated statistics. It was the market. And really, I would argue that the Fed will have to start raising rates in earnest again if this euro-dollar market ems out and starts heading higher. So interestingly enough, if we looked at the data, it actually made sense that the Fed didn't need to raise rates. But what's interesting is I think this guy's getting sucked into the political vortex. And what's so sad is I can literally see him turning white. He's getting chewed up by the system. Now, the interesting thing about this, of course, is that he should be entirely economic data dependent. And remember, the Fed is a lagging indicator. So they're going to follow, lagging information. And the one thing that they're most concerned about is, of course, inflation and runaway inflation. And if we understand that 2/3 of all business costs is employment, and it's the cost of keeping people working, then we have to be really cognizant of what the jobs numbers are. And I thought it was really interesting later on in the week after they sort of said, okay, we don't need to raise rates, everybody calm down. Now the jobs numbers are coming out extremely strong. And, the headline is they're hiring at a blistering pace. So my hunch is that we probably will still have to see further interest rate hikes because of the economic data and where we are in the economic cycle. And it's going to be interesting to watch how the Fed now has to backpedal about how they basically said, oh, no, okay, well, we won't raise interest rates anymore. So it's a bit sad for this guy is that he is literally being played by the market and by, politicians who aren't happy with the fact that they don't really have any choice at the Fed. They have to follow the data. And if anything, he should, I put out this funny, well, I didn't put it out, but let's see if I can find it. This is actually what he should be doing. And this is some smart-ass Canadian trying to tell the Federal Reserve what they should be doing. But let's see if I can find it for you. Of Alan Greenspan. I don't know whether it'll even be on here anymore or not. But anyway, there's a really funny cartoon. Maybe. When Alan Greenspan was in his heyday, darn, I don't see it. Anyway, when it was in his heyday, you can see, he has a very sanguine sort of default expression on his face. And basically they just took like a grid of like of the mugshot and then like 16 mugshots. And underneath every mugshot was a different emotion: happy, sad, angry, frustrated, right? And it was exactly the same image. And what Alan came to learn was you don't tell the market how you're feeling. You don't get sucked into emotion. You're just like, well, the data says we do this, and so we're doing this. And you don't at any time make the market feel as though they actually have your attention. So I'll see if I can find that cartoon. If anybody on the site can find it, post in the lounge. It's a great cartoon, and it's really how Fed governors should act. Is they should be completely straight-faced, right? And just say, look, we're just working off of the data. So anyway, kind of a fun aside. And this poor guy, like I said, you can actually see him going white. The market's got him by the short and curlies, and it's just really messing with his head. Thought it was really interesting to see, and sort of like we've been sort of talking a little bit through this, and gee whiz, I have been blabbing along quite a bit here today. But we've been talking a little bit about the potential of the market trying to bottom here. We've been talking about things. Whoops, looks like we're losing some lows here. We've been talking a little bit about things like harmonics, and then things like where the hell is it? I don't know, here somewhere. Well, there's the Gartley level. And then I was showing you, but I thought I had it on here. The GAN levels. There it is. On Coinbase. Really, I mean, a hugely important battle level here. No doubt about it. Huge battle level here. So through the week, interesting to see, just kept going on. And interesting we get news. And I actually kind of like this because, people are all, wrapped up in CME and CBOE and all that. And it turns out quietly that Japan actually is starting to and the Japanese yen is starting to overtake the Americans in Bitcoin. And I thought that was kind of cool. And it just, if anything, what I like about this is it really sort of gives the international flavor of Bitcoin, which is something the world's never seen before. So really, really interesting angle in that the Japanese are actually starting to buy and trade more Bitcoin than us over here in North America. Political rant. I was just interesting, this Howard Schultz guy, does he split politics and divide the next election? Then Mr. Trump can just walk in. Tough to say. But I really did like his rebuttal. People were kind of like, hey, you're silver spoon billionaire. And he's like, fuck you, man. I grew up in the ghetto. And I worked my way up. So I like that reply. What's the political influence going forward? That's another conversation. Great to see people are coming out and actually saying we have the cure for cancer. I mean, fuck, isn't that awesome? Sometimes these drug manufacturers come out with outlandish plays. I think it would be really cool if they could put these kind of cures and stuff on blockchain, because I'm worried that the big pharma companies, they make so much money on just treating cancer that if somebody comes along and says we have the cure, they're just going to buy it out and bury it. So wouldn't it be cool if they actually threw it on the blockchain where it could be like literally indestructible information? That would be so awesome. But a boy can dream. But let's all, make it a point that in 1 year's time, let's go back and someone remind me, and let's see how they did. Did they actually come out with a cure? Really good analogy in the stock market of trade location. We talked lots about Bitcoin and its 78.6 level. This was so cool because you had basically a W. Everybody should be able to see the W. We had a price gap. Gaps love to be filled. We have reload zone, fib levels, and, you can see 78.6. I think we like to call this the shark setup. Love these trades. And I was very pleased to see a couple guys in the site actually took the trade. So I was exceedingly pleased to see that people are actually making money with this information because it works. It's really cool. I find it fascinating how the Americans are talking about security. You want sort of a very stark, sort of evil look at how nasty this technology. And I've made it a point. I'm not going to put these Siris or these Amazon robot things in my house. No fucking way. And you want a reason why not to, just go watch this video. It's quite shocking, really, how blatant the sort of observation of you is. Really, I love PMA kind of stuff. So whenever humans sort of just, blatantly help animals out, it always touches my heart. So you're always going to see Brian tweeting about that. Sorry, guys. Really cool example of a higher time frame bond trade setup in the Europe. This is that bot setup. You saw it off of Tron, off of like an hourly chart. Well, gee whiz, the same logic works off of like a weekly price chart. And, if anything, this is the kind of thing, this is what worries me about Jacques and his 13 buddies, is I think that Europe could be in for a really nasty slog. Usually when bond prices go up like this, it means that economic activity is unwinding, inflationary concerns are abating, and bond prices go up. Their yield, of course, is fixed, and the only way that the interest rates on those bonds can fall is if they take prices higher. And this weekly bullish bot on the euro bund is painting for even another like $25 rally here, or about another 15-20% rally in bond prices themselves. That's huge. And I tweeted out about a month or so ago, the Japanese bond market is doing the same thing. So, usually bonds rally during economic weak periods of time. So the writing's on the wall, folks. I mean, it's there. And I remember when I was in Europe through last summer, I was like, this is ridiculous. Everybody's driving a new car. Everybody's eating vegan and paying just ridiculous prices for food. Everybody's, rah, rah, party, good times, good times. And I was just like, this is unsustainable, people. I'm sorry. I don't know if it's unwound too much now, but I would imagine, Jacques, you're going to get a lot more business over the next few years as the economy deteriorates over there. But it's probably not the kind of business you want. You're going to be put to work. Okay, so I talked a little bit earlier about this CBOE CME overview. Really, I thought it was a fantastic interview. Well, not interview, dissertation. I don't know, thesis. I don't know what you call it. Really liked it. Very, very good professional stuff. This kind of talk makes me sick to my stomach. They specifically made it illegal to buy stocks on credit cards, or even to settle your brokerage account on credit cards, because you really don't want this kind of money coming into the investment space. So when this guy announces that he's going to take credit cards to buy crypto, I'm like, fuck, stop it. This is not sound investing. You never borrow money on credit to go and invest. That's called speculating. This is a really bad sign. Really was not happy with seeing that at all. Computer internal security stuff. I thought this was a really interesting article just on how you can quickly change your DNS to try and help you save yourself. Really good analogy of how I use all of the stuff that I'm trying to teach you guys in crypto. I use it in the stock market. And man, what a beautiful chart. I mean, this thing just looks sex-alicious. And if I'm not mistaken, I actually think it finished up here on Friday. Hopefully everybody looks at this and goes, okay, yeah, I can see the W's, right? And if this was an altcoin, you guys would all just be piling in hook, line, and sinker. I bought down here where the directors are long, and I make it a habit that if I'm going to buy venture capital stock, I absolutely have to buy where the insiders are long. And so this ultimately becomes your biggest challenge, Colleen. And we had crypto as another level oneer. Where are you? Anyway, what any other level oneers that are here? Crypto, yeah, cool picture. Isn't that a cool picture? Anyway, own pollution. Okay, interesting name. My challenge for you guys is, how do you figure out where the insiders are long these cryptocurrencies? You're raw cryptocurrencies, right? I remember years gone by, and I was trying to find it for you guys this morning, but I couldn't find it. It was one of the Z coins or whatever, where they actually publicized where they went out to the public and they raised financing. It was like around $11 or something like that. And the coin came out and it quickly zipped up to like $200-300. I'll see if I can try and find that through the week as a really good sort of analogy in crypto to try and figure out where the insiders are long, where the smart money is long. But really, that's got to be your job now, especially with regard to these altcoins and stuff. I mean, if you're trading them, have fun with it, trading setups and stuff like that. But if you're really investing your hard-earned money, and you want to be able to sleep at night without alarms going off, you're investing, I would highly, highly suggest you try and figure out where the insiders are long these ideas. And unfortunately, what worries me in a lot of crypto is kind of like what was it, pink coin or whatever I was showing you there earlier, right? The cool part about volume profile is that it can technically show you where all the sort of the smart money is long or short an asset. Oh, where the hell did it go? Oh, well, I lost it. It was in here somewhere. Yeah, pink. So this is like a charity coin, right? So you can use volume profile to try and help you technically see where the smart money is long. But if you can actually get some anecdotal evidence, the insiders are long from this level, it makes your life so much easier as an investor. And like in the stock market, that's basically what I do. Is I just simply hunt. Show me signs where the insiders are long. In fact, on the daily brief and on a daily basis, that's all we do is we just go through stock after stock after stock. And I've got tons of them in the venture capital space, right? Where's that? Oh, this is a good one. They're in the actual block space, right? Blockchain. Nope, that's not. That's a beer stock. That's Shane's crazy ass beer stock. Where's that? Where's my crypto page? Crypto. Here we are. This one up here. Impossible to see the chart. It's so messy. I know. Sorry. There we go. So here, right? Only 15 million shares out, 16 million, trading less than book value. You can see where the insiders are long. You can see where the insiders are long. Options to directors. So I'm more than happy to own this asset. Basically, I'm just going to ride on their coattails. And that's basically, this is the during, and here's another one, right? Insiders are long this guy from 6 cents. Another perfect example of VSE venture cap stock in the blockchain space. And you can see the technical bottom that's trying to come in, basically where insiders are long. I don't like to actually tweet out and stuff trades that I'm just putting on, because sometimes when I put a tweet out, all hell will break loose. But, I did tweet this out. The market is substantially far away from where I'm long, so I don't even really care what happens now. But here's a great example where we got basically anecdotal evidence that the directors are long from 17 cents. And here it is going through its bull cycle. And, for the level oneers, just so that you have this context, where should we do this? I guess over here. This was a stock that basically met all the VCIM criteria a couple years ago. And that was the stock lows basically looked like this, right? You can sort of see those current names that we're interested in. Like look at them all. They all look like they're down right against the bottom ends of their ranges. Whoa, does that sound kind of familiar? Does Brian buy the bottom ends of ranges, right? I mean, you just go through them one after the other after the other. When you zoom out on them, they all look like they're just basic train wrecks. Well, ironically enough, I want to make money from trading, so I buy at the bottom when nobody else is interested in. But the point here is this was an example, exact same thing. Options to directors, rolled the stock back, yada, yada, yada. And we had one site member who just said, okay, well, Brian, I'm taking your course. I'll just buy $500 worth of this stock. I don't know what the fuck's going to happen. I got 500 sitting on the sidelines, whatever. And he sort of forgot about it, and he loaded up his stock account one day, and it was, like $15,000, $20,000 more than he was expecting. He's like, what the fuck happened? And it turns out this happened. So this is why I run these models. And of course, the directors are all long down here, and this kind of shit happens in the stock market all the time. This really isn't out of the ordinary. And I used to joke, like people in crypto were all like, man, this is incredible. 10x, 100x. Oh, I'm so smart. Crypto's the best. And I was like, you know what? This is just business as usual. It's not really anything out of the ordinary. So just a really great analogy of how these VCIM models work. Boom. I think this thing even went even higher, if I'm not mistaken. Yeah, look at that. Went all the way up to $4 or $5 a share. And I think he was long from like 10 cents, right? Pretty good trade, eh? What do you think? Does that kind of look a little like crypto? So this stuff happens in the stock market all the time. And I might make an argument, right? If you looked at this thing from here, you might go, yeah, okay. I think this thing's got some room to run. Right. And that's basically exactly the same thing. In fact, I hate to say it, but I actually think this thing even looks more bullish. I mean, look at that freaking chart. It's beautiful. That's that weekly price chart. So anyway, this is to give you an idea that this stuff works in the stock market as well. But the key here is you got to find out where the hell the goddamn insiders are long. And I think the exact same message has to pertain to crypto as well. Find out where DAV is long, okay, Colleen? And all you got to do is just follow the whales. Just ride those coattails. Okay, I've been blabbing away here for like a good hour or two, eh? So I apologize, guys. I tried to get through all of this. We talked a little bit, we said there a few minutes ago, really interesting level in Bitcoin here, 8-1. I would imagine, like we said, we had the Harmonic guys get a signal. The GAN guys are interested in here. I won't go into arcs and speed bumps and all that today. We just don't have enough time. But really interesting trade location. Sadly, though, when you do listen to a guy like this, I do like the trade location. I think there might be a trade there. Through the day yesterday, we were watching to see whether W's would come in. And it's interesting how that guy in the video, no, volume profile is level 2. Sorry, dude. But it's interesting how that guy in the video, this guy here, he's like, I've never seen a Bitcoin breakout on a Saturday. So it's really interesting, ironic that this guy put out his tweet. And what does Bitcoin go and do? It goes and puts in big old fucking W's through Saturday. Now, the irony of it all is that he may be vindicated because this signal might be bullshit and the market might crap out. But, ironically enough, there's actually, I tweeted out there's 3 W's here. Hopefully you can see down, up, down, breakout, the move up through here. There's also this, down, up, down, breakout through here. There's also this, down, up, down, breakout here. And there's also even this little one, down, up, down, breakout, like 4 W's. So I was pretty impressed. And I even put out, I said, you got like 3 W's that came in, and it actually came in on volume too. But the problem with this, and this is what bugs me, and what makes me feel as though yesterday was a trap, was I'm a big fan of momentum confirmation. And if we actually get price that perks up through here, and I put out a tweet just simply said, can we accept above value? Which would mean, in essence, the market accepts being outside of this yellow range and it's ready, willing, and able to explore higher. If we can accept above here, then I think rock and roll. And the rule is, like 2-bar confirmation. So we had 1 bar that zipped up here. And then the question was this is an hourly chart. Was this going to paint an inside bar failure? And if so, then that means that this breakout was kind of bullshit. So if we go and look and see what Bitcoin did, we're looking on Mex there, right? We can see that indeed inside bar. And the sad part about it is this inside bar, and level 1ers, you'll learn this in a few weeks when you get to the candy store. But this inside bar is actually a sell signal right there. Boo, hiss, hiss, boo. So inside bar failed. Down we go. And this is what really bugs me, is that on top of the fact that this was an inside bar fail, we actually had a momentum divergence confirm out of all of this. So you can see how basically they took price to new highs, rah, rah, bull. But you notice that momentum did not go to new highs. Divergence. So at this point here, it's like, potential divergence. And then the actual divergence itself confirms that, yep, it's in there. Bulls better temper their enthusiasm if we break through that low there. And you can see, did we break through there? Ooh, that's awfully close. And you can also see now we're coming down and testing that. Let's keep our fingers crossed. If you're a bull, come on, you son of a bitch, don't break down here. But you can see how flirty this is with trouble. Now, we could make the argument that we might have a bullish divergence that's trying to come in here. So, if this is the extent of the selling and the market starts to work its way back up, and this can confirm, then we might have a nice little bullish divergence that offsets that bearish div. And I don't know whether we can call this confirmed yet or not. It's so close. I think if we look at other exchanges, we do see that it did confirm. Like if I look at OKCoin, for example. Yeah, you can see. So hopefully everybody can see. There to there. There to there. And then there to there. Right. And that looks like that's confirmed. So what we have to say, I mean, maybe you're like, all right, Mr. Gartley, I like the idea that maybe we've got a bottom in here. Mr. Gann, right? I like the idea that, maybe we're going to pivot here. If you had taken the W, right, and you can see how big the W's are. If you had taken this W, which is perfectly fine, you can see that it broke out there, then you actually have to risk all the way down to here. And I kind of like the idea just in the short term. We go AB. CD. Oh, look at that, eh? So they're going to take it right down, 78.6, candle body lows for trade location. And, really fuck with the guys who took this W, whether they're really actually going to honor their stops, right? And if this AB equals CDs, we're going to come right down against that level. If this is still a bull, then rock and roll. But for the time being, the traders of the world who are actually trading setups through here, we got a big bulls. You got to cool your jets. There's just nothing for you to do right now. You just got to cool your jets. And, the worst part about it is I could even imagine, some market structure guys will actually be trying to hunt shorts through here. I don't really have anything that sets up well for me here. Doesn't look like it's a big enough bounce to generate a bot setup. And AB equals CD, it looks like this is just going to like careen right down into this level. So don't necessarily have a short there as well. Willie has actually gotten stupid already. We're at 8 minus 81. So technically we are oversold. And then also lastly, what I really don't want to see is I don't want to see a massive ramp up in the bears. So, this was 152,000. This bar was 144,000. This bar was 143,000. So that's actually less. That's, if you're a bull, that's a good sign. But we would really like to see the bull, kind of like this candle here, step up and say, yep, I'm driving the bus, and give us another higher high here. So, off the lower time frames, it looks to me like this was a FU breakout, and they're bringing the market back down as well, too. We talk about Hoag's 80% trade. So I think the fact that we sort of floundered and failed up here, we accepted back into value 80% of the time, we should go down and test value low. So I think that's what's happening right here, right now. And then also too, what I'd say that if this thing is really ready to rally, are they really going to rally it on the weekend when all the CME boys and all them are not around and they can't participate? I don't think so. And, our resident bear, Thomas the Bear, my co-host for the Daily Briefs, he's basically he doesn't even like trading Bitcoin on the weekends anymore because he finds it's a lot of fluff. So maybe we have to wait for the beginning of the week, Tuesday, Wednesday, London kill zones for a test of this 33 area to find out whether this really is the bottom. And then if we can turn on some sort of momentum divergence with Willie Stupid, well, then we can start thinking long again. So that's sort of what I'm thinking about Bitcoin right at the moment. What I really like, and this is sort of what I was tweeting out, and I think I'll probably finish at that today because I've been talking forever here. But on that Twitter feed, I think this was it. I put out this Litecoin chart. That to me actually looks like a really good looking bullish bot. I've got a nice little fuck you candle here that ran after these lows, and then quickly they jackknifed the market out of there. So I don't think the market really wants to be below this level. We'll see. Only time will tell, but I really don't think it does. Violent rally back, and notice that it literally came right back to the bot entry level and then stopped. And then they brought the market kind of like what I'm expecting out of Bitcoin right now. You can see this sort of sloppy bottom. They really had to come right back down, test the bottom, and notice this cool little W down in here. And then W, 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 just like multiple W's. Nice trend line break here. 1, 2, 3 tags of a line, breakout. And then, of course, 1, 2, 3 key lows for the bot to work with. And in essence, long from 32 and change, looking for 47. I mean, I'm not looking for the moon, but I definitely think, $50, that could be an easy, big fat round number for this thing to go after. So I really like the look of this Litecoin trade. Really do. Very pretty. Of course, is there any guarantees that this trade's going to work? Of course not. I don't know. I'm a trader. I'm a statistician. But I got to tell you, if you're going to be risking money in the marketplace, market's trying to set something up here on Litecoin. And that's kind of what I put out like sort of the Wayne's World game on, right? We actually got something to chew on here, which I was very pleased about. Now, what's happening right now? So you can see market zipped up, right? Confirm that big ass double bottom. And then just like Bitcoin, it's sort of slowly pulling back here. I would imagine probably at this trend line, it's going to find support. But if I was trading this massive bot, then I'd just be buying at 32 and risking to 28. And just, whatever happens. I don't know what the internals look like here. They probably look like a train wreck. Not bad. I mean, it didn't really break out through the top here. We would have liked to have seen a nice vroom vroom here. And I did notice this too also on Bitcoin. It's like we had that perk up through Saturday and then just relentless selling here over the past, like 12, 14 hours. Remarkable. Just selling, selling, selling. Somebody is sitting on this fucking thing. It's interesting how we actually never did get stupidly overbought, and there isn't any bearish divergence here. The one thing that bothers me about Bitcoin is that bearish divergence, but I don't see a bearish divergence here. So ironically enough, to actually create the bearish divergence, we're going to need the market to go to new highs, but the MACD not go to new highs. So we'll see how that plays out. Only time will tell. And again, I know you guys are like sitting there going, okay, yeah, well, Brian, I want an absolute guaranteed money maker, right? Now, if you're going to take a trade, I want to know that you're going to make money. Well, trading doesn't work that way. You got to identify your reasons for taking a trade, try and vet them over time. I was funded as a prop crude oil trader trading the bot. So I know that it works and it produces desired results, what I want. But do I have any guarantees that this trade's going to work? Of course not. So anyway, so that's sort of what I'm seeing with Litecoin. Okay, so I've been blabbing. How long have I been going here? Jesus, probably a good hour and a half, 2 hours. I think I'll probably leave it at that for today. I apologize I didn't get to all your individual requests, but it took me a long time to go through that Twitter feed. And I think I got basically up to date here. I don't think I missed anything else. But hopefully I've talked about everything that I posted here. Okay, I think I'm going to leave it at that. I got to go get ready for the boy and give him a fun afternoon. So have yourselves a good day. Of course, all you site members, we will see you in the daily brief tomorrow morning. And we'll take a look at the frivolity and where we think the market's headed in the short term. Okay, guys, have yourselves a great day. All the best, and bye for now.